I'm Kirk Short with the Wichita home team at Keller Williams Signature Partners, and I'm having a properly socially distanced conversation with my buddy, my insurance agent, Marc Shook, and we felt that with all of the earthquakes that Wichita has been having, it's the perfect time to get out and kind of just talk about what you think its impact is on insurance. What should we sit there and think about as a consumer, and what you're being told on your end, because I know this is definitely new to us. But before I get going, Marc, since you are my agent, why don't you tell everybody how long you've been in this business and why you're in it?
Well, actually, this is our third year going in with the Shook Insurance Agency. We are partnered with Allstate. And really 10 years ago, if I had told me that I was going to be an Allstate or an insurance agent at all, I would have told you you're crazy. But a big string of events kind of led us to where we are. So the opportunity was amazing on your own business. And I had a wreck 4 years ago.
Yeah.
Really good one, and going through that process really kind of opened my eyes to the insurance world, and as fate would have it, a book came available, and here we are.
And here you definitely are.
Here we be.
So, one of the things, again, that I was impressed with and why I wanted to go back to Marc is, for those of you that have watched my videos, you would have seen a previous one that we had done. I don't know, I feel his approach is a little bit different. And he's very concerned about his clients and customers and having proper coverages and such. And I was calling him about the rash of earthquakes and what should I do? What coverages are out there, and should I consider it? And got to thinking, this is perfect for, I think, all of you to sit there and watch and listen to. So, what is your take of the events?
Which ones? The earthquakes?
Absolutely.
I don't think anybody knows, what the problem is or exactly what's causing it, or if it's going to get better or get worse, or go away completely. Who knows? But I do think that people are concerned, making sure they are covered for if something bad really does happen. In the past 2 weeks, we've had a lot of earthquake events, and we've had a bunch of phone calls about people asking about earthquake insurance. And I think it's absolutely something that people need to think about. I always tell all of my clients, be sure you're insured for anything that can and could happen. And, who knows? That big earthquake could happen. We don't hope it doesn't, but you never know what tomorrow can bring. So the best thing you can do is just be prepared and be as protected as you can. So earthquake insurance is definitely a product we sell. We highly recommend it. So
one of the things I've been watching with the news and stuff like that, when they're talking about the earthquakes, it's like, what are they figuring is happening? There's a fault line called the Humboldt Fault that sits there and runs east of town. But there's a lot of little fractured fault lines that run through Wichita. A lot of people don't realize it. I didn't realize how many. But especially up there at the 13th and Greenwich area, they believe now that there's 2, maybe 3 little fault lines that run within sort of that area, that vicinity out that way, and that previously they were unaware of. And granted, part of that's just because Kansas is not traditionally an earthquake state, and so people the USGS doesn't have a lot of seismic devices here. State of Kansas does. They've got a few more, but it's changing times, right? So being that we just look at things like hail insurance for our roofs and worry about tornadoes and wind damage, whether it's tornadoes or just, these god-awful winds that we sometimes get here.
Periodic floods.
There you go. How does it, what is earthquake insurance? I mean, what is actually being covered?
So What you're really insuring against with an earthquake is a really big loss. You're talking, a 6, 7, 8 magnitude earthquake that could really structurally devastate your house, possibly. Earthquake insurance policies don't have small deductibles. You're not going to find one with a $500 deductible or a $1,000 deductible. The standalone policy that we use with a company called Palomar, and they're out of La Jolla, California. Their lowest deductible is 5%. So for every 100,000 in dwelling coverage, you're paying $5,000. So when you talk about that, we're not insuring for a little bit of settling or maybe a little crack in a basement wall. We're insuring against, hey man, my house is gone. So when you look at a traditional homeowner, they cover for things like hail, water backup, fire, things like that happen on a pretty consistent basis. But with everything that's happened over the past, especially the past 2 weeks, people are really concerned. Hey, am I covered if something really bad happens to my house? And traditionally, I don't know of any, but there may be some. Traditionally, homeowners policies do not have earthquake coverage, right? You will see some carriers that have a earthquake endorsement.
Yeah.
Problem with a lot of those is the deductible can be 15-20%. So if you've got a $300,000 house, you're talking about $45,000 to $60,000 before insurance kicks in a penny.
Okay.
So when you talk about that kind of stuff, that's the magnitude we're talking about. We're not talking about some chips in the paint and a crack in the wall. We're talking about,
I've got the brick falling off the face of my property. I've got tree
I got a
shifting
wall
in my
down,
basement. Now I've got to actually go and jack it up
Right.
and do all sorts of things.
So really what we're protecting against is a catastrophic loss to the house or the dwelling. The endorsements may not even cover the whole dwelling amount. The deductibles are usually pretty high.
Yeah.
Doesn't cover for personal property, those kinds of things. And those vary by carrier. I mean, there's all kinds of different rules and stuff. What we recommend, and the reason we use Palomar, is it's a standalone policy. So the dwelling coverage will have to match what your dwelling coverage is on your supporting homeowner's policy, which is good.
Okay.
The deductibles start at 5%. So if you got a $200,000 house, the deductible is $10,000 at the lowest end.
Okay.
But these policies cover the entire dwelling. They cover personal property. They cover loss of use. So if you can't be in the house for 2 weeks, it'll help put you up somewhere.
Right.
Also has building code coverage built into it. So if you have a wall fall down and exposes some old electrical wiring that needs to be brought up to code, that will help care for that.
Right.
This also has other structure protection too. So if you've got, sheds out back, a garage, those kinds of things, those would be covered under this policy as well. Honestly, they, on average, with a 5% deductible, they're coming back between $250 to $350. That's $250, $350 a year.
Yeah.
So you're talking, $30 a month.
Right.
For a pretty good peace of mind. And there's a lot of factors that go into those too, but again, what we're really protecting against is that really, really bad day.
So if I'm going to read between the lines, I mean, everybody talks about insurance. The idea is, okay, insurance is really more of a savings account for when a future problem may occur, right? I mean, that's why I look at my homeowner's insurance relative to hail damage and things like that. So the idea behind it is if I'm paying $300 a year for my earthquake insurance and something happens in hypothetically the next 10 years, I've invested $3,000, but then I'm potentially saving myself tens of thousands of dollars.
Or hundreds.
Depending
on how bad it is, yeah.
And, granted, part of it is a gamble, right? That's why there's insurance companies. But it's like, what do you effectively want to risk?
Right.
And
that's kind of how I explain it. So there's a lot of people that, a lot of our clients don't know a lot about insurance, and I wouldn't want them to. It's not it's a real sexy study material, like I've said before, but what I tell them is like a big swimming pool, right?
Yeah.
Everybody throws their premium money in throughout the year, and as claims come up, accidents happen, fires happen, money gets pulled out of the pool. It's a collective thing, right? And that's how the insurance company is able to stay afloat and stay solvent. But yeah, at the end of the day, it is really how each client wants to carry their risk. I have clients that have auto policies with us, but they self-insure their house. I don't recommend that, but there's people that do that. So it's really, at the end of the day, it's just how you prefer to carry your risk. And a lot of people really want to have that protection for $30 a month or whatever it is, just in case a big one hits,
So let me ask you this, just since we're on the topic of insurance in general, I'm gonna digress just a tad bit to a roofing situation I ran into with a client, and you may be able to help me to guide this into some clients and how they should look at things, right? So one of my clients has, in this case, it's a multifamily project. So they got a few buildings, right? And we found that it has roof damage. And their agent, their policy that was set up when they had their loss was such that it had a high deductible to the tune of $5-6 grand a building covering its damage. Well, their costs to replace the roofs were $8,000 a building ish, and so they barely got anything out of that. And when I looked at that, I was flabbergasted. I'm like, what the heck is your insurance agent not doing, looking out for your interests and saying, hey, you need a policy that covers all the buildings together and covers you as a whole, right? Mitigating your deductible for when you do have a loss so that you have max coverage. You did this with me when we first sat down with my property. We went through our property. I went through a couple of my storage buildings, my investment property. We've gone through all that stuff, establishing a proper insurance coverage, added some things, eliminated some stuff. So keeping that in mind and doing that, what do you have to say to folks that are watching this to either look out for, ask their insurance carrier if they're unwilling to give you a call, or how you may address this a little bit differently yourself? What do you have to say to that?
So a lot of times insurance is it's a necessary evil, right? It's a bill people have to pay. And so a lot of times we want to make that as inexpensive as possible. And unfortunately, we need to look at that in the complete reverse, right? We need to look at, what am I covered for? What do I need to be covered for? What are my deductibles at? And unfortunately, even in our office, we call every single renewal, and we offer them what we call an insurance review, which is what you and I sat down and did. And what we do is we go through that policy. We may make sure that, the home is covered for the right amount, the deductibles are good, the coverage is good, there's not anything we're missing. And we go through that kind of step-by-step process with people. And we do that for auto policies and motorcycle policies and life policies and everything. But a lot of times when we call out, I bet we probably do 15 to 20% of our entire book will actually do an insurance review. And I don't know if people are used to just being sold so much or what the stigma is about it. But everybody goes through one. Like, are you going to do another one?
They will.
So once they go through it and they see what it is that we're doing, they understand it and they want to do it. Because it's not their job to know insurance. It's boring.
It is.
It's not entertaining subject material.
Getting real estate.
It is. Yeah. It's just it's not exciting. It's not. Ooh, let's go study for an insurance test or anything. But I think that's really important. The other thing that we really look for is, hey, are we missing any discounts? Is there something that you have on here that you really don't need that we can save you some money on? So we just want to make sure that when the policy was sold, whether I sold it, one of my staff sold it, or the owner before us and his staff sold it, we want to make sure it's set up right. We want to make sure you're charged the right premium. you're getting all the discounts that are, you're eligible for. And really just, we want to show that we care about you, your belongings, your family, and that we are really here to help protect you. I don't know. I really kind of thought that would have been industry standard.
No.
But we're finding out quickly it's not. So I guess my piece of advice would be go with a company that has a local agent, number one. You can always get insurance cheaper. Like you can go tomorrow and find a carrier tomorrow that will give it to you cheaper.
Yeah.
But find somebody you trust. Find somebody that will tell you what you have covered, what you don't, how you can save some money, and just have that person to call if something happens.
Or occasionally go have a drink.
Or go have a cocktail, a little happy hour. I liken it to, Jay and Becca deal with Travel Junkies. I was talking to somebody the other day about it, and it made sense to me with talking about a local agent with the travel that we do.
Yeah.
Now, I've never found a trip cheaper than what they've gotten us. I'm sure it happens. Yeah. But at the end of the day, I don't even care. Like, they take care of it for me. They take care of me. We went to the Dominican Republic, and Hurricane Isaac was coming by. Yeah. And I was literally on the phone with Jay at midnight. We were flying out the next day at 6. Yeah. It's like, Jay, are you sure we should go? And he's like, yeah, just go have fun. We'll pull you out if we need you to. And so I just felt good about that. I don't have to go search for everything. I don't have to go figure it out.
He sounds kind of like an insurance agent.
No. So I was telling somebody this. I'm like, hey, that's kind of what we do. You don't have to go study insurance. You don't have to worry about that. And we see a lot of policies that are done online, and people are running around Kansas with state minimum insurance, and that's scary.
It is.
Because you're one bad accident away from a really, really big financial setback.
No, I hear you totally. Well, no, like I said, I appreciate this immensely. If you're watching this and you have any questions about your insurance, Marc Shook is absolutely gentleman and incredible. Give him a call. What's your number, Mark?
Our phone number here is 316-945-0090.
And you are located at
3931 North Ridge Road, right next to Jack's Liquor.
There you go.
Conveniently enough. But we're up 39th and Ridge, so if you've gone to K96, you've gone too far, and if you hit 37th, you've gone too far. So they're easy to find.
I was hoping this was going to be a live presentation officially. But with the state of some of the things going on in the news right now, this is recorded. We are going to set up in the future a live event, and that way people can ask questions about insurance. So, guys, stay tuned. And other than that, again, I'm Kirk Short with the Wichita Home Team at Keller Williams. I appreciate all of you. I appreciate your referrals. I know Mark appreciates your referrals.
Absolutely.
And we would love to assist you when and where needed. Again, thank you.
Gotta get the wave in, right?
No, that was good.